Brian Hoops with Midwest Market Solutions joins us now to talk about these markets. Let's first start over here in the corn market, Brian. This corn market got off to a weaker start. We're trading about 4 to 4 3/4 cents lower all the way across the board. That all-important December contract, 3.29 3/4. That is actually down 4 3/4 cents. That 3.30, we did get as low as 3.29. There are some that are saying, if we would close much below that, that could open the door down here to 3.22. What are your thoughts?
Yeah, good talking with you, John, for the second day in a row. I agree with that comment. You've had last week's lows and the prior week at about 330.5. So we broke through that today. This is the lowest we've traded since June the 29th. And technically, a close below that 330.5 area does open the door to test the lows down in the 320.5, 324 area. And that certainly could come here relatively soon. Now, there's, not a perfect weather forecast. It never is during the growing seasons, but key areas of Iowa look like they're going to get left out in the rain again. And yesterday's crop conditions numbers showed almost every state improving, especially Illinois, but Iowa was shortchanged on rain, and their conditions went down about 3% last week. We could see that same thing happen again Monday. Conditions continue to deteriorate and turn lower, and that will provide a little support to this corn market. So, you get down those contract lows, that would be a place where I think you could see just a small bounce as the market tries, to reprice itself, and it would be oversold at that point.
Sure. Over in the soybean market right now, August is down 12 pennies, and many of these contracts, like for instance, September down 13.5, November down 14 3/4, 8.85. Again, getting awfully close to some critical support here.
Yeah, we went through last week's lows, 8.88, and that's kind of the area I think you'd be watching on a closing basis. The low from July the 16th was 8.83. That matches today's low. That's your technical support. And then if you can close below that, you'd probably fall to an uptrend line around 8.71. So from a technical standpoint, this soybean market has held in much better than what the corn has. We have not revisited the contract lows or even very close to doing it. That's because that market has a lot more weather premium pumped into it, as we don't really see the rains for August yet. And we've had a lot of export business. This morning we did not, and so we're taking and repricing ourselves, and that's kind of, this market is trying to find that equilibrium between improving crop conditions and maybe a loss of demand from standpoint that we didn't have a sale today, but we still have a lot of sales on our books.
Wheat market for Chicago down 6.5 cents on the September. December down 6 1/4 cents. The Kansas City wheat market, it's down 5.5 on the December contract. And the Minneapolis wheat market here today down 1 1/4 on the December at 5.20 3/4. Brian and I'll be back in just a moment. We're going to get deep into what's going on in the livestock trade. So stay with us right here on rural America's most important network. Natural gas on the higher side here today. One of the commodities that is higher, gold, has been the big story of the day, going up and ringing the bell at $2,000 an ounce earlier in the day. Well, let's go talk about what's going on in the livestock trade. And first stop is the live cattle market as we wait to see where cash will develop. August fats are up 32 at $100.75. The October's 104.65. That's up 82. I did hear that we still had asking prices out there for this show list, about 102 in the south, 162 in the north, and the show list was just a little bit smaller this week than it was last week, particularly in the south. August feeders up $1.85 at 141.20. September feeders catching a little altitude now, 157 higher at 141.20. We'll come back to that here in just a moment. A lot of those contracts are at least $1 higher. August lean hogs now steady at 54.55 on our bar chart numbers. October's down 7, but December is now up 17 at 51.70. And now it almost looks like we got a little bit of spread action going on over here in the hog complex. Here, Brian, is that what's taking place?
Yeah, we've seen a lot of spread trade in this hog market last several trading sessions. We're seeing a little bear spreading today with the front months being down and slight gains in the deferred contracts, but it's very light volume. very limited activity in that hog market today. The cattle are seeing a little bit of strength after lower opening, just the opposite of what we saw yesterday, where we saw big gains after the cattle on feed report come out and then a lower close. But right now, the trade optimism is looking for steady to $2 higher cash trade from what we've heard. And like you said, numbers a little bit tighter in the south. They've been tighter in the north, and that could lead to some strength this week in that cash market.
Makes you wonder just a little bit how much captive supply some of these packers may have here as we get ready to roll the calendar into August.
Yeah, that's the one thing that you wonder with the weights are heavier, still 37 pounds above last year, and big supply numbers. But you wonder about the captive supply if it is maybe much tighter than what has been allowed us to believe.
So this feeder cattle market that's seeing this gain, this reversal from what we saw yesterday, is it just the whole entire enthusiasm about what could happen with cash that's driving this, or part of it could it be corn price?
Yeah, I think part of it is corn prices. There's a lot of demand for the feeder calves right now. Producers want to buy these calves, get them on some grass before they put them into feedlots. And with corn prices moving cheaper, and it looks like we're going to have a big crop of corn this year. I think there's a lot of producers that are going to want to feed that corn through some animals, and they're wanting to buy these calves, get them, as I said, on grass, put them in feedlots as they get a little bit older, and work their corn that way. So there's probably going to be some hedging opportunities in some of these deferred feeder cattle contracts on continued strength. Seems like August is a great time to be laying some hedges off, especially if we get close to those 150 range in a lot of those contracts.
Brian Hoops, Midwest Market Solutions. Mr. President, thank you very much. Always good to check in with you. Thank you. Christina, ma'am, back to you.